What's up, guys? This is going to be a very quick video going over one trading view indicator that has allowed me to make 15K on this account, 5K on this account, 11K on this account, 5K on this account, and 11K on this account. All in 7 trading days, I've made about $48,000, and every trade that I've taken has come from this one indicator. This indicator allows you to top and bottom tick the highs and the lows of New York session, Asia session, and probably London too. I don't know. I don't trade London. I'm in REM sleep, but let's go ahead and check it out. I've actually turned off all the other indicators. That way we can just focus on this one. And the indicator I'm talking about is cumulative volume delta, or CVD. Now, what is CVD? It is market buy orders minus market sell orders. So let's say at a certain price, there is 10 market buyers and 5 market sellers. We now have a positive CVD of 5. Now, at that same price, if there's 5 market buyers and 10 market sellers, we now have a negative CVD of 5. So let's go over some examples on the chart, and I will show you why it works, the significance of it, and how you can implement it. So if I'm looking at today, which is October 29th, at this high of New York AM, from 10 to 10:30, we see a high and we see a lower high. But on the CVD, we see a high and a higher high. If we know it is aggressive market buying minus aggressive market selling, this means we have more aggressive market buyers here than we did here, but we made a lower high. What's the significance of this? There must be some passive seller absorbing all of this buying with the intention of moving the market down, because it should be effort versus reward. If there's more aggressive buying, the market should move up. The fact that it's not is telling me there is a seller absorbing it, and that ended up being the high of day up until FOMC came out and it fueled a 200-point move sell-off. Now, that's just one example. Let's go to the day before. What do we see? At this low of day, we have a low and a lower low. But on the CVD, we have a low and a higher low. Now, what does this mean? It means that there weren't enough sellers to continue fueling the move down because they were exhausted. They ran out of steam. Yes, we swept out this low, but it wasn't fueled by an equal amount of selling. Selling stopped here, buyers stepped in, and we moved up, and this ended up being the low of day. Let's look at the day before, on Monday. What do we have? We have a low at 9:30 and a higher low at 10:30. On the chart, on the CVD, we have a low and we have a lower low. More aggressive selling absorbed by buyers. Buying stepped in to push the market up. The sellers are trapped, ended up being the low of day. Do you guys see how it happens at the low and the high of day every single day? Let's even go back to last Friday on CPI. What do we have? There's actually multiple CVD divergences here. Let's use this one. So we have a high here and a way higher high up here. But on the chart, we have a high and a lower high. This is a huge CVD divergence. High, lower high, CVD, high, higher high. Ended up selling off 100 points. So this is the last 4 days of NQ showing at a significant level some kind of CVD divergence, and it happens every single day. Now, this is on NQ. If you're a gold trader like me, I can pull up some examples here as well. Let's look at today. It happened at the high of day, right? Let's check it out. We have a high at like 820 and another high at 850. Now on the CVD, we have a high and a higher high. More aggressive buying on the CVD, not represented on the candlestick chart. Sellers are absorbing it with the intention of moving the market down. High of day. What about last night? I called this one out in my Discord. This was an area I was expecting the market to reject. Like I said, you can use this with any strategy. I'm an order flow trader, so I do use Bookmap. I use candlestick charts. I use a depth of market. I use volume profiles. I have other things that I can use, but this is just something you can implement regardless of your strategy. So here's another example. We have a high in this area of resistance I had marked out, a lower high and a lower high. What do you think happens? Exactly. On the CVD, we have a high, higher high, and a higher high. another divergence in price in the CVD, it fuels a 40-point move down, which 40 points on gold is a lot. We can even go to earlier that day, near the lows of the day, where I know there's a CVD divergence here as well. I know it. Yeah, there's actually multiple, right? So we have a low and we have a, wait, where's it at? Here it is, okay? So on the chart, we have a low and a higher low, but on the CVD, we have a low and a lower low, right? Another divergence, more aggressive selling, absorbed by the buyers, buying steps back in, and it fuels a crazy move up. So it happens every day on gold, happens every day on NQ. This is something that you can literally use day in and day out, and you can use it to any strategy. It has allowed me to have a higher risk to reward, a higher win rate. It's made me 50 bands in the last week. And like I said, it's something that I use every single day. So hopefully you guys can use this. It's very easy. It's free. Add it to TradingView. Look for it every day and your trading will get significantly better. That is all for now, and I look forward to seeing you guys in the next video.